Hi traders, Anthony here. So this is a follow-up to the last video I did. That was the AVAX or the Avalanche trade that I posted into our Telegram group. The original, by going to Telegram here, this was the trade idea. Notice where the stop loss is above the cloud here at 72, 30-minute chart. Right now we talked about this in the video, so I just wanted to recap. In the video we covered risk management, position sizing, and where to place stop losses, etc. And we discussed setting up the stop loss above the cloud, or depending on your preferences, setting it up inside the cloud around the halfway mark. So let's increase the cloud so we can see what we're talking about here. Okay, this is the cloud. And I'll take out the shaded accumulation distribution levels. We'll just take those out for now. So we talked about using this cloud and going with the 30-minute time frame, setting our stop loss above these dots here. Obviously, if there's a daily or a weekly level, we're going to go slightly above that. And here we have a daily level. And then the other option was, as you can see, we've broken out of the cloud here. You could have pulled your stop loss along this midline here between these two levels on our trend channel indicator. Now we worked out that the stop loss situated here was a break-even, no risk situation. That was the option. And the stop loss up here was going to, in dollar value on this particular account, would have resulted in a $40 loss overall. As it was, if I'd have left my stop loss where I originally placed it, we'd still be in this trade, or we could have closed down here at this target level. Now I pulled my stop loss down to halfway here, which was a break even, and it got taken out, so didn't cost anything, risk free, but I've missed out on this opportunity. So this is the thing, you want to work out what your risk appetite is and set your stop loss accordingly, and we can use these levels. The other trade that we had was Bitcoin. That was the one that we posted on Friday. And I think it was the same situation. If we can go back. This was the setup. Where were we? Yeah, here it is. You see the cloud? This is why we have this cloud. Okay, so the trade was a pullback, and we shorted it as this was trading around about here, this level here. We did close 80%. And we had the option of setting our stop loss up above the cloud here, which would have been minimal loss, really, $40 or $50 in dollar value on this account, or go for the break even around midway through the cloud. So break even got taken out, and if we'd have gone with our cloud here, the cloud's set up back here, and it traded up to it. We would have made some money, or we got taken out at break even. Now, on the 30-minute chart, we know that we're going to be trading after a cloud breakout, whether it's bullish or bearish. We're looking for the opportunity. This is what I've been talking about in previous videos. And here we go. This one's traded up through. The amount of times that a stop loss placed above here, the amount of times that gets taken out is going to be minimal. Okay, we had one hit here. I guess it'll happen occasionally, and if you're pulling your stop loss, if you're following this level here, well, you're generally going to be in the money. For example, once you've taken 80% and you pull your stop loss down, that's in the money. That gets taken out here, and you've actually made money. This is our break-even level up here, more or less. I think one way to approach this would be kicking off with our stop loss above the cloud and stay with it and let the market do its thing. And then when it obviously starts rotating like this, well, then we can tighten up our stop if we want to at that point. So let's say we follow it for a while. If it's ranging like this, to give it a bit of room to breathe, leave our stop loss above the cloud. Okay, and then when we see it rolling over, we can tighten up our stop. And then by that time, we're well and truly in the money. If that's our entry, and this is our break-even level here, well, this is all profit. So that could be a slight adjustment that we make to our trading plan that will increase our profits and give us some nice results. So the thing that you need to be constantly aware of is the market is going to spike into liquidity. Right? That's how it works. Okay, so we get these moves that pull retail traders into shorting, and then all of a sudden the opposite happens and they get taken out. Here's another example of retail traders getting pulled in here short, stop losses above here, and look what happens. So we have to look at avoiding these stop runs, the volatility, as much as possible. I mean, every now and again we're going to experience a loser, but the amount of trades we win far outweighs the losses. Now look here, for example, see how many times did the market spike above our cloud? It didn't. So this is a really valuable piece of data that we have on our chart here. Okay, we're looking at these trending moves here. Look at this. Okay, we short it and we have the option to set our stop loss initially above the cloud here and trail the price here. You know, and once we're well and truly in the money, well, we can tighten up our stop. That's fine. So I think we have some interesting times ahead, and I'll wrap up the video with that. But yeah, I mean, it's definitely an evolving process. You know, when you have a trade strategy or a trading plan, see what works and keep refining it. So guys, with that, jump on board, gain access to the indicators. The link is below the video. There's a 7-day trial period. Make sure you smash those likes. My YouTube channel needs a bit of love, and I'll see you in the next one.